Hello guys, it's Dale here with Swing Levels commentary for January 2018. Let's start with Australian dollar, US dollar. There was a winning trade since last time. So from this area it was short, right there was the profit. So it was pretty nice trade. And right now there is one new level that I'd like to trade. As you can see on the profile, there is pretty strong zone right there at this long level. You can see that there was volume accumulation in this sideways price action. You can see pretty heavy volumes accumulated in this area. You can also see that there was pretty strong rejection of lower prices, this pin bar right there. And after that, strong buying activity, which indicates strong and aggressive buyers pushing the price upwards. Now I think that those buyers were accumulating their buying positions right there in this area. And most of those positions got accumulated right there. So that's the reason for my long level. I'll just wait for pullback to this area and go long from there. Stop loss for that trade will be below this low. It will be at 95.80 and profit target will be at 97.29. Let's go into the Australian dollar, Swiss franc. There was a trade since last time from this area. It was a short trade. You can see that the reaction was pretty nice. But unfortunately the original profit target got missed by just one pip, at least at my broker. So maybe you got quoted, maybe you took the profit target. If you were using IC markets, you probably missed that profit target by one pip. I got quite lucky because I was able to quit the trade before the year ended, so I quit the trade somewhere right there before the end of the year because I didn't really want to hold that trade during the holiday. So I took a profit there, and hopefully you did too. You took with the trade before the holiday, but if you held it, you maybe missed it by just one pip depending on your broker. And if you did, well, right now you still should be in a position. It may not be a bad idea to quit the trade because the reaction clearly was there and we missed the profit target just by one pip. So maybe it would be best to quit the position at break even, but according to the rules, if you are trading 100% to the rules, you should stick to the position. So that was the short trade we had there. And as far as current levels are concerned, there are two levels that I'd like to trade. The first one is a long level from this area. I'll go long from this area. The reason for this long level is this volume accumulation that took place in this sideways price action. You can see that those volumes got accumulated within strong buying activity, within this buying activity right there. And I think that strong buyers were adding to their buying positions right there, and they placed most of their volumes in this area. So I think that if the price comes back, those buyers will be defending their positions and they'll push the price upwards. A stop loss for a trade will be at 75.32 and profit target at 75.80. Now I think that maybe if there is a nice reaction, you could go for more than just few pips, and you can actually go for bigger profit than that because the stop loss is really tight. So you can go for a positive risk reward ratio there. Another long trade that I like to take, it's pretty distant, but I would say pretty strong one. You can see that pretty massive volumes got accumulated in this area right before this strong buying activity. This strong buying activity indicates that those volumes were most likely volumes of strong buyers adding to their buying positions and afterwards pushing the price upwards. You can also see two pretty nice rejections of lower prices, which indicates aggressive buyers rejecting lower prices and pushing the price upwards. So for those reasons, I think that strong buyers were adding to their positions there. Most of their positions got accumulated right there where the volumes were the heaviest. So that will be my entry point for my long level. Stop loss for that trade will be at 72.70 and profit target will be at 74.16 right there. Let's have a look at the Australian dollar, Japanese yen. There was a trade from this area, but it got hit during the Japanese yen rate decision right there. So this candle was caused by the rate decision on the Japanese yen, and as you probably know, I'm not trading during those news, and I was not really into entering the trade after the rate decision, because as you can see, the price went almost to the stop loss, so I didn't enter that trade after the rate decision. And still, it would be very risky to enter after rate decision, because it's basically the strongest macroeconomic news for the Japanese yen there is. So it could start a trend, or anything can basically happen during the rate decision on all the currency pairs, not just the Japanese yen. So it's the best thing to avoid trading during and after the rate decision. So apart from that trade that I didn't take, and hopefully you too didn't take it, there is one trade that I'd like to take. It's a long from this area. If you look at the profile for this trend area, you can see that the heaviest volumes in this trend got accumulated right there. And you can see that those volumes got accumulated in this sideways price action, and after that you can see that the trend continues right there. I think that those volumes were volumes of strong buyers adding to their buying positions and pushing the price upwards. So I'll be waiting for pullback and go long from there. Stop loss for this trade will be at 87.64, and the profit target will be at 88.26. Maybe you can also go for a bigger profit target for a bigger risk reward ratio, because again the stop loss is pretty tight and we are trading in direction of a trend. So if there is a pullback, maybe there will be a reaction and we'll be able to jump into the trend and take much more than just risk reward ratio 1. Maybe we can go for risk reward ratio 2 or risk reward ratio 3. You can for example take half position out right there when you have your first profit, and then trail your position in the direction of the trend. If you look over at the Australian dollar, New Zealand dollar, you can see that basically the last month was a sideways price action, was a rotation, and nothing really happened. So I didn't take any trade there. The last trade I took there was this winning trade from this area, and that leaves us with only two older long levels, this one and this one, which didn't change from the last time. I won't be commenting on those two long levels again in today's video, so if you want to know the reasoning behind those two long levels, go ahead and check out the previous video I made last month. If we go over at the Australian dollar, US dollar, you can see that there was a winning trade since last time. It was a pretty spot on the reaction and take profit right there. So there was a winning trade. And apart from that, I also have one long level that I'd like to trade. It's a new level from this area. And you can see that pretty heavy volumes got accumulated in this area, in this sideways price action. This is the trend setup I'm using. So basically what I do is that I use the flexible profile for the trend, which is uptrend right now on the Australian dollar, US dollar. And you can see that in this area the heaviest volumes got accumulated. I think that strong buyers were adding to their buying positions there and pushing the price upwards from this area. So I'll be waiting for pullback and go long from there. Stop loss for this trade will be at 76.37 and the profit target will be at 76.94, or you can go for more than that to have a positive risk reward ratio. There is also one short level that I like to trade. It's based on those volumes. The short is from this area. This is a stop loss, this is a profit target. I was talking about this trade in the last video, in the video last month. So if you want to know the full reasoning behind this short level, and go and check out that video. I won't be commenting on it today. If you look over at the Canadian dollar, Japanese yen, you can see that there is basically the same setup as on the Australian dollar, US dollar. You can see that there is a strong uptrend, and within this uptrend there is a strong area where heavy volumes get accumulated. you can see that those volumes got accumulated in this sideways price action area, and after this price channel broke, there was again strong buying activity, indicating that those pretty heavy volumes that got accumulated there were volumes of strong buyers. So I'll be waiting for pullback to this area, and I think that those buyers will be defending their positions and they'll push the price upwards from this area. The second reason for this long level is this area. You can see that the price rejected that area, which made it a strong resistance zone, and when the price blew past it, it became strong support zone. So this is a resistance becoming support. The second reason for the long level that I have there. Stop loss for this trade will be at 89.38 and profit target will be at 90.13, but you can of course go for more because again the stop loss is pretty tight. So I think that maybe you could take a first profit right there and trail the position to have positive risk reward ratio. Let's go into the euro dollar. Now there weren't any trades since last time, but there are two pretty nice long levels, pretty nice new long levels. The first one is right there, and it's based on this sideways price action and those heavy volumes that got accumulated within this area. You can also see that there was pretty nice rejection of lower prices, which indicates strong and aggressive buyers rejecting the lower prices, and afterwards there was strong buying activity right there, indicating that those volumes were volumes of strong buyers. I placed my long trade right there at those volumes. Maybe it could also be possible to enter at those volumes which were a little bit bigger, but I'd rather enter sooner than that. So I'll be entering in this area because I got a feeling that if the price is to turn, the market will actually react to the first volume area, not to the second one. And even if they react to the second area, it really won't be a problem because my stop loss is right there. So either one of those levels is alright, but I personally prefer the first one. Stop loss for this trade will be at 1.1817 and profit target will be at 19.21. The second long level that I'd like to take is right there, and it's based on those heavy volumes that got accumulated within this area. You can see that this is basically the place where the strong buying activity started, and even if you look at the accumulated profile on the right side, you can see that throughout this whole area pretty heavy volumes got accumulated. So this is very strong area, and you can see that after this volume accumulation, this buying activity started. And for that reason, I think that majority of those heavy volumes accumulated there were volumes of strong buyers. So if the price comes back to this area, I will go long from there. Stop loss for this trade will be at 17.36 and my profit target will be at 18.50. If you look over at the Swiss franc Japanese yen, you can see that there's one short level and one long level. Both are pretty old and I was commenting on those in the previous video in the previous month. So I won't be commenting on those. The short level is right there, long level is right there. If you want to know the reasoning behind those two levels, go and check out the last video I made the previous month. Let's go into the New Zealand dollar, Canadian dollar. As you can see, the market there is in sideways price action and there is basically nothing that I like to trade there. I'm not really into long trades from this area because still I think that because of this sell-off, the sellers are strong there. So I'd rather not take longs from this area, and I don't have any new shorts there. The only two short levels that I have are older ones. The first is from this area, the second is from this area. And again, if you want to know the reasoning behind those, go and check out the previous video where I was commenting on those levels. Let's go into the New Zealand dollar, US dollar. There is a new long level that I like to trade. It's from this area. You can see pretty massive volumes got accumulated right there. And actually this is a point of control of the year. If you look at the profile for the whole year, you will see that the heaviest volumes got accumulated right there in this area. Let me show you. Alright, so here you can see that the heaviest volumes throughout this whole area got accumulated a little bit lower, but still within the strong support area we have there. So I think that this is actually a pretty strong level to go long from. You can see that this volume accumulation took place within strong buying activity, indicating that those massive volumes got accumulated by strong buyers who are adding to their buying positions and pushing the price upwards. So I'll wait for pullback and go long from there. Stop loss for this trade will be at 69.53 and profit target will be at 70.84. There is also a second level that I like to trade. It's an older one from this area. I was commenting on that in the previous videos. If you want to know the reasoning behind this short level, go ahead and watch the video I made for you the last month. Let's go into the US dollar, Canadian dollar. There was a trade since last time. It was a long from this area. As you can see, there was a reaction and it almost went to profit target. It didn't quite get there, and after that there was a gap at the opening of the new year and the price went to the stop loss, which was quite unfortunate. I was very lucky because, as I said earlier, I was quitting all my trades at the end of the year and I basically quit the trade somewhere around there. So I almost took a full profit from this trade, but if you didn't close it at the yearly close, which wasn't a mistake at all, I would say, you would take a stop loss right there. So this was the only losing trade since last time. And if you look at the current levels, you can see that this level is still listed as a new level there. And I actually think that this level is a pretty strong level to go short from. And there are two reasons for that. The first reason is this volume accumulation that took place in this area, where the strong sellers were adding to their positions, pushing the price through our long level. There are definitely strong sellers adding to their positions there, and if there is a pullback to this area, those sellers will probably defend their positions and they will push the price lower again. The second reason for this short level is that it was a long level. If there is a long level that we have and the price just goes past it, this strong support level becomes strong resistance level. So for those two reasons, because support becoming resistance and because of those volumes, I think this is pretty strong level to go short from. So I'll wait for pullback and go short from there. Stop loss for this trade will be at 25.90 and profit target at least 24.54. You can go for more if you want a positive risk reward ratio. My second level that I like to trade is a short from this area. As you can already see, there are pretty heavy volumes accumulated in this sideways price action right before the start of the strong selling activity. What happened was that strong sellers were adding to their selling positions there. After that they rejected higher prices with this pin bar and they started aggressive selling. So this is the start of the selling activity. And this is the place where most heavy volumes got accumulated. So I'll be waiting for a pullback to this area and go short from there. Stop loss for this trade will be at 29.20 and profit target will be at 27.94. Let's go into the US dollar Swiss franc. And there are no new levels that I like to trade. I was considering going short from this area, but the reason I won't be trading that short level is that the stop loss for this trade would be really tight. The possible short level would be right there and the stop loss would be right there, which is like 15 or 20 pips, which is definitely not a swing trade, it's basically intraday trade. So I won't be taking that short level, which leaves me with only the older levels that I have there. Short level from this area and the long level from this area. Again, I won't be commenting on those levels in this video because I was commenting on them in the previous video. So if you want to know the reasoning behind those two levels, go and check out the previous video that I made the last month. And the last pair will be US dollar Japanese yen. If you look at our short level right there that we had, there was a really nice and strong reaction to that level. Unfortunately, if you remember, this reaction was during the FOMC, and unfortunately I wasn't trading that because of the FOMC meeting and because of the US rate decision. So I wasn't trading that. If you were trading that level, I think it was pretty risky, but it was a profit. So apart from that, you can see that there is not much happening on the US dollar Japanese yen. I think that we'll see some movement, but right now there aren't any new levels that I'd like to trade there. Alright guys, so those were the new swing levels. I'm looking forward to seeing you next time, and until then, happy trading!